please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The last 2 days have been eerily similar in the sense that the market has opened at around 10,350 thereabout and then has seen some selling pressure, and this morning the SGX Nifty is indicating that we'll once again start somewhere around there. Ashwani, Gujral, Sudarshan, Sukhani and Mitessh, Thakkar with us. Good morning, gentlemen. Ashwani, your trade worked beautifully yesterday. You said that short the gap up. What's the trade today?
Good morning, Anuj. Hardly a higher opening, so let's play the same game again. See, if you are not taking out 10,400 with any sort of force with a gap, chances are these 15-point gap ups will not sustain. And every day you will at least make one excursion to the lower end of the range. Now the Nifty lower end is rising from 270, maybe it's getting up to 320. But still that does not help our cause. The Bank Nifty is still around 25,800. Again, any 100-point rally out there can be used to sell. Yesterday we made money by selling in the morning and then midday we bought. So at 25,700 if you bought, you still made 100 points at the higher level. So being that sort of trader that if market goes up only then you can make money, I don't think that's the right approach. You have to play both sides and you have to play on the boundaries that remains the overall play for the day if you have to. Medium term, or you can say people who carry positions, they can remain long. For them stops are 10,250. But given the way global markets were moving higher, the breakout should have come by now. Each day it keeps getting delayed. That's not a good sign. That is just something for people to keep in mind, that you can't keep going sideways forever and then hope for an upside breakout. The more we go sideways, the more the trend on the upside weakens.
Okay. Good morning, Ashwani. You wouldn't worry about crude as a fresh macro problem. Now, once again going towards the $64 mark. Your stop loss would, your lower bound would still be 10,270 and 25,750 for the two indices?
Broadly that, so far we have not been able to break, the lower or the upper end of the ranges. So the lower end of the range broadly becomes your stop loss and on a closing basis. So we need to close below those levels to think that maybe something is not working.
Okay. Morning, Sudarshan. So what about you? How are you positioned, considering we've been so sluggish, unable to sort of show any meaningful break on the upside?
Good morning. Well, I would think that dull and boring markets are usually bullish. When markets do nothing, that's a message that possibly accumulation is going on. And we'll just have to wait and find out. But the trend is up, the short-term trend is up, so we should be long in the Nifty and in the Nifty Bank. Both indices, the charts for both indices have bullish patterns and both bullish patterns confirmed. So for the Nifty, the chart pattern target is 10,500, and for the Bank Nifty, it's about 26,700, 800. Both are high enough. Now, these targets are numbers, but the patterns do exist. So I'm long. I would suggest that traders should be on the long side of the market. These are not intraday trades. You just stay with the position till either we reverse it on some kind of a message from the market or it reaches our approximate targets. So stay long. If not, even at current levels, buying is justified. We are in a very tight contraction. The markets could break up on the upside anytime.
Okay, market could break out anytime. Mitessh, good morning. How are you trading the index today?
Good morning, Anuj. So I think, we have some kind of an upward bias, but also is the fact that last few days has seen, as Sudarshan rightly pointed out, some kind of contraction. So the idea should be that if you are wanting to trade more on the long side, either you trade the breakout, which means that the Nifty gets past 10,360 levels, or you want to buy at the lower end of the range, which is closer to about 10,280, 10,290, and then keep a stop below 10,250. So that will be the trading approach. Either, if you get an intraday dip, I think the best area to buy would be sub 10,350, or wait for 10,360 to be taken out, and then you can look for continuation of about 80 to 90 to 100 points on the upside.
Okay, fair point. Let's discuss individual stocks then. Ashwani, what's on your list?
See, Rain Industries has completed a pullback. So that we can buy with a stop of 315, target of 332. United Breweries is a buy with a stop of 1090, target of 1150. Sun Pharma Advanced Research is a buy with a stop of 410, target of 435. Future Retail is a buy with a stop of 565, target of 590. And Sun TV is a buy with a stop of 868, target of 895.
I'm most convinced by Sun TV because all three of you have Sun TV on your list. But Sudarshan, your other stocks?
Yes, but I must talk about Sun TV first.
Sure, please.
The bullish head and shoulder pattern is now confirmed and the targets are quite high. So this is not a swing trade, a short-term trade. You buy it and hold it. And maybe someday you'll explain again why Sun TV is so popular. But just hold the stock, don't miss it out. Apart from that, I have NIIT Technologies, big rally, small correction. That correction was sideways. A resumption of that rally should be possible. That is a buy. India Cement is a buy on dip stock. Cement stocks have been doing rather poorly, but it has strong support at 160, and from 160 it has bounced 3 or 4 times. Another bounce has taken place. For all we know, this bounce could take us enough to make money. So that's a buy. I have 2 short sells. This is simply for the day, intraday. Don't carry short sells anyway outside the day. Marico is a short sell because it's been doing nothing, underperformer, and Bharti Infratel. A reverse V, I mean, we know these V-shaped rallies, a reverse V-shaped decline is bringing it down day after day. So there are some possibilities, but primarily focus on the long side, stay with the Nifty and the Bank Nifty. The Nifty has this tendency of going to a hurdle and then suddenly breaking out. So we hope that happens again.
Okay, well, it's not 3 but 4 guys who said that Sun TV will rise.
Yeah, actually.
Anuj included. And in any case, just to complete that point, Sudarshan, in my house, Sun TV is always in the green. Unfortunately.
Okay, so that's one trade that's always long on Sun TV with the remote control. But Mitessh, let's get your stock list as well.
So I have a mix of buy and sell calls. There are 2 sells, which is Dalmia Bharat, which appears to be making some kind of a distribution pattern on the intraday chart. So maybe some pullback would happen here. I would sell with a stop at 3005 for targets close to about 2900. Another sell is Idea, a similar setup again on the intraday charts. The pattern looks slightly bearish, so it's an advanced call. Sell with a stop at 102.5, look for targets of 92, and the ideal selling range would be anywhere close to about 99, 99.5. And 3 buy calls. Gas Authority is a buy. Keep a stop at 461.5. Look for targets of 484. IDBI is a buy as well. Good intraday chart. So buy with a stop below 60 for targets of around 66. And you've said it before, Sun TV is there as well. Very strong positive crossovers on the short-term chart. So that's a buy with a stop at 852 and look for targets of 910.
Okay. Gentlemen, do stay on. We have lots more questions for you. But let's look at some buzzing stocks. And one of them has been Dixon Technology, buzzing and approaching its highest level in a year. The company posted strong operational performance in the first half as well. GST disruptions seem to have tapered off. So what's in store for the second half? Atul Lal, Managing Director, Dixon Technologies India, joins us on the phone line. Atul, good morning. Thank you very much for joining us. Well, that really is the first question. Have all the GST disruptions tapered off?
Morning. Yeah, we had a huge issue of destocking, pre-GST. The things are back to normal. The order book is healthy. The demand is okay. And all the more in the verticals of lighting and washing machine, the order book is very healthy. Yeah, okay. It's back to normal now.
Okay. Mr. Lal, on GST itself, just to get the taxation sort of in check, have you adjusted prices? Have you taken any price cuts because of GST? And also now, where are we? Pre-GST as opposed to the new regime, are your tax rates generally higher or lower for all the consumer electronic products? The ones that you sell?
So, in the space of consumer electronics, namely LED television, and also washing machine, because the GST rate is 28%. And there has been some increase in the pricing because of taxation. Earlier, the effective rate was somewhere around 23-24%. But in the case of mobile phones, there has been a small decline because in the earlier regime, the VAT rate in some of the states used to be higher. So it's a mixed kind of a bag for us.
Okay. Well, let me now come to how sales have been looking. There must have been a pre-Diwali impact as well in your first half. Will the second half continue to show the very strong trend in EBITDA and revenue that you showed?
Well, the order book is very healthy. I won't say the demand is increasing in a hockey stick kind of a way.
Okay.
But in our case, the order book is healthy, and also we have been able to have some new customer acquisitions. So we feel that the kind of growth trends that we've been showing for the last 5 years in the first half, I think we'll be able to maintain them.
Okay, can you give us a sense of, the revenue growth that you're expecting for FY18 as a whole at the top line level and within the individual business components as well? Where is the big kicker coming in from?
So I'm not in a position to give you any forward-looking numbers, but if you see our top-line growth last 5 years has been somewhere in the range of around 32-33% CAGR. So we are fairly confident the similar growth rate will be maintained, and the same is the case in the bottom lines. In our case, the significant growth is one coming from lighting as a vertical, and also consumer electronics as a vertical. These two verticals are showing a heady growth.
Yeah, I can see that. I think it's, even EBITDA-wise, it's one of your best performances. What's the capacity utilization running at as a whole and in the various units?
In our case, you see that we are an asset-light model.
Okay.
And we are on a customer acquisition spree.
Oh, right.
The capexes are not very high.
Okay.
So we always would like to keep certain capacity free, because once the customer is added, we don't want to wait to add capacity and then start service again. So, but if you see our first half, in consumer electronics, the capacity utilization was 102%. So we've expanded our capacity to 1.9 million from 1.2 million now, which is already operative in our Surabhi plant.
Okay.
In our other verticals, it's ranging between 55 to 60%, which is fine. I'm okay with that. In the case of mobile phones, it's on the lower side. It's just 32, 33%. So we are in discussions, and we are in advanced stages of discussion with some new accounts on the mobile phone side. And we hope that by Q4, the capacity utilization would significantly improve.
Okay. Just a word on the margins as well, Mr. Lal. Though you mentioned that you would like to maintain things where they are, margin was, I think, 4.2 versus 3.8 at the end of second quarter. What about this mix between the ODM versus the OEM, and which is the segment where you typically draw higher margins?
You see, the company's strategy is always to migrate more and more to ODM, because that's where we have the IP, that's where we have the design and the sourcing control.
Sure.
So the margins improve. So if you see the verticals of lighting, the ODM revenues have increased from 30% to 41%.
Okay.
Washing machine as a vertical is completely ODM, 100%.
Oh.
In the case of televisions, consumer electronics, the ODM portion reduced because one of our large accounts, which is primarily an OEM account, had a very significant increase. So in absolute numbers, the ODM portion increased, but as a percentage terms, it fell from 12% to 6%. So the whole focus in the coming quarters and as a medium-term and long-term strategy is to control the IP as much as possible.
Okay. Fair enough. We'll leave it at that. Just for those of us who have only now been tutored in these words, it's original design manufacturing versus original equipment manufacturers. We've been talking about buzzing stocks, and here's another one that shows a great deal of promise. Action Construction Equipment posted a strong second quarter, doubling of EBITDA. Saurabh Agarwal, the Executive Director, joins us for more details. Saurabh, good morning. Thank you very much for joining us. Always a pleasure looking at strong performances earlier part of the day. Will this strong performance continue is the point? I mean, this is a decent growth in revenues, about, what is this, 25% growth in revenues and EBITDA doubling. Is this a trend that you can maintain?
Yeah, good morning. Yes, as of now in the current year, I mean, it represents a 25-30% growth on the top line and supported by a 8-9% EBITDA level. Seems to be in place. And as of now, the flow is maintaining, and the market momentum with respect to our space where we work is all going in the good direction. Yeah.
But what gives you the leg up? Is it that more road contracts are coming up and that's why your cranes revenue is increasing? Is it that there is private construction? What are the trends that we should look at in the broad economy to gauge your stock?
See, primarily, we work in the infra as well as the industrial space, about 60-70% of the revenue coming from the infra side. So yes, definitely, road sector is contributing, but apart from that, whether it is metro construction or railway, and even urban infrastructure, that is also contributing. And off late, in the last 2, 3, 4 months, we've noticed that even the industry is coming back. So we are seeing a lot of demand and more sale of equipment in the industry side of our business as well, along with infra.
Saurabh, good morning. This agri equipment EBIT of 1.7 crore versus loss of 3.6 crores. I think that drew your bottom line numbers for last quarter. What's the likely trend here?
See, again, in the tractor business, in the first quarter, we definitely had a negative because of the GST impact, and they were stocking out at all the distributor points. But in the second quarter and coming now in the season as well as in the March quarter, I'm very hopeful that, again, in the tractor business, we should be able to do about a 20-30% growth, and the EBITDA should remain somewhere around 5-7% by the end of the year, which is looking evident again.
Saurabh, morning. So another thing that's obviously excited the market is the fact that promoters are putting their own money in the company. I believe you picked up around 26,000 shares on the 15th of November. Mr. Vijay Agrawal picked up around 60,000 shares. How much have promoters right now bought from the open market? I mean, the yearly limit is 5%. If you could just tell us your strategic thinking. Are you looking to buy more? What's the call?
Yes, you know, that is what we bought as of now, which the numbers you are saying. And yes, as and when, I mean, we feel like it, I mean, it's nothing that we've thought of in terms of, but I'm sure as and when the market continues, we'll be doing something, yeah.
Okay.
Is there a certain level that you have in mind? What is the, I don't have the immediate details, the stock exchange details with me. Where is the promoter shareholding, and do you have a certain threshold in mind where you'd like it to be at?
See, we are already at about a little over 73%. And so you can very well understand that
you
we
can't
are more
go
or
over
less
75 anyway.
Optimized, yes. So that you can very well understand, yeah.
All right. Saurabh, thank you very much for joining us with those details. So always a positive when the promoter is keen to put more money, more skin in the game, and only what limits him is the rules from the market regulator. We'll take a break on that note. We are coming back with the pre-opening rates and, of course, that promised chat with Deven Choksey.